What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 31. It's November the 22nd, 2023. We made some trades today, so let's get into it. The first thing we need to talk about today, we need to talk about yesterday's closing price. So yesterday's closing price is located right here at this purple line at 35,145. And this actually played a very major role on the first trade that I took today. So let's go ahead and get into it. So trade number one. Today, traded a little bit different. Usually, if I trade in the pre-market, I'm just looking for one good setup, and then I'll come back when the market opens and really look for my setups to fully form. But today, I was looking at some pre-market action. I saw a good setup, so I was like, okay, that's perfect for me. So let's talk about it. So number one, trade one. I went long here after prices had a false breakout past yesterday's closing price, and then we established a higher low. So I took this trade back up to the zone that prices broke out from up here at A. Now this right here is a typical higher low setup that I look for. Now what made this higher low very appealing to me was the fact that we just broke past yesterday's closing price. Now the market doesn't always necessarily disrespect the closing price like it did today. Usually, well, not usually, but sometimes the market will sell all the way down to yesterday's closing price, pull back, retest it, and then the downtrend will continue. But there will be some occasions where the market just comes back to retest that price. It pushes past it a little bit to make traders think that maybe it is a breakout to the downside. And then you see prices start to slowly but surely creep their way back up above yesterday's closing price and then continue to move upward from that point forward. So today was one of those days where we saw a false breakout past yesterday's closing price. And that's very significant. So anytime you see prices break past not only yesterday's closing price, but really any major level of support on the chart, and then you start to see that buying starts to come in, you want to be very careful about shorting it. And if anything, you want to potentially look for the long trade. So today, once I saw that higher low get formed, I said, the chances of the downtrend continuing, I wouldn't say that it just doesn't exist, but the fact that we came all the way down past yesterday's closing price and we started to wick out a little bit when we got past that level too far. I think 145 was the closing price. We got down here to about 135, and then we started seeing a whole lot of wicks. So I was like, okay, if a higher low was made after all of these wicks got formed, if prices do break back down below the higher low and stop me out, I'll be perfectly fine with taking that trade because this is my setup, so I got to get in. And then I just took it back up to the prior level where prices broke out from at A. And I felt like that was a really good trade. I looked for what I was coming in here for. I saw my higher low setup. I took it. I reached my scalp target and I got out. So for me, that's a good trade in the pre-market right there. So that was trade number one. So then we come to part two for today when the market opened at 9:30. So let's go ahead and talk about trade number two. So trade number two was right here towards the bottom of the screen at point number B, higher low B. So I went long here as prices came back to retest the higher low at B. Now this was a good decision to exit early because I saw momentum coming in, and whenever I see a whole lot of selling momentum coming into that higher low level, I just like to get out if I don't see immediate bounce from that level, because that means that for whatever reason the selling pressure is too strong and you don't just want to sit there and watch the selling go all the way to your stop. So you want to get out while you still have a chance to before it hits your full stop if you see that that's the way that prices are moving. So it was a good decision for me to exit early. Good job on that. But I should have re-entered once prices spike back up through my entry price. And that right there is one of my biggest rules. And that rule is if you get into a trade from the right price at the right levels in the overall direction of the trend, and you take a trade that fits your trading plan, but you still end up getting stopped out, if you just take that loss and prices continue to move away from your entry price, that's okay. That's a loss that you just got to take. But if you get stopped out and prices immediately spike back through that entry price that you took, you got to ride that momentum and you got to get in. No excuses, no questions asked. And that really threw me off that trade too, because I was kind of like a deer in the headlights. I was frozen a little bit because I saw the momentum come in and then the market just started moving and I was like, dang, that's my setup. I'm about to miss it. Oop, there it goes. Dang, I hope it comes back. And it never did. So that's why when prices spike back up through that entry price, you cannot hesitate. You can't think about it, which means that you already have to know beforehand what you want to do. So you already got to be thinking, hey, if prices spike back up through this entry that I just took, I'm getting in again. So I think on trade 2, I just needed to be a little bit more prepared, because if I would have got back in at the same entry price that I entered at 209, I would have been able to take prices all the way back up to my scalp target, 20 to 25 points higher. And if I wanted to, I would have been able to maybe hold this trade all the way back up to the top level of resistance at 290. So a lot of points left right there on the table, and that's kind of disappointing, and that kind of threw me off a little bit, because I saw my setup, I got stopped out on it, I had an opportunity to get back in, I didn't do it, and then I saw the market run all the way up. So I was like, dang, man, that's tough. So that kind of messed up my psychology a little bit, because now I was like, okay, I had a good trade to start off in part 1, but then I gave back half of the gains on that trade, on trade number 2, after I took this loss, and then I wasn't able to get it back. So I felt like, dang, man, I'm seeing what's going on, but I'm not reading it right. So that kind of affected me on trade number 3 also, but let's read the notes first. So on trade number 3, up here at point number D, I shorted here after prices created a triple top that was followed by a lower high right here at D inside of the blue circle. But once again, I cut this trade too early, and what I learned is that I have to hold my best setups, because let's go ahead and zoom in and take a look at 3. Now at 3, this was the perfect setup when it comes to a higher low failure. You want to see the uptrend kind of start to lose momentum. We saw that happen at point number C, because we had a long tail candle wick that eventually led to a lower high, or you could consider this a triple top like we said before. But regardless, we can all agree that this long tail candle wick indicated that momentum was kind of dying down, especially when you look at the fact that this level of resistance used to be a support level from a prior higher low that came near the top of a move, and this was actually the second to last higher low before the market reversed. So anytime you're actually in a very strong uptrend and you see prices come all the way up and then come all the way back down, the likelihood of prices coming all the way back up and then making a new high, it doesn't mean that it's impossible, but it is a very low probability, because it's just too much uncertainty in the market. If you had a big move to the upside like this one, and then you pull back to maybe like the 50% retracement, and then you started moving up again, okay, maybe you can make a new high after that. But for the market to run all the way up, come all the way back to retest where the run up started from, and then go all the way up again, you just got to be very wary about that. So the fact that we had a long tail wick as prices came back up into that level in conjunction with the overall market scenario just let me know it's like, it's not time to short yet, but I'm beginning to see the first few steps of my setup starting to form. So take a look at candle number C right here, and then follow this all the way down to this volume bar right here. So this is the corresponding volume bar for that candle up top at C1. Notice how this volume bar was the highest volume bar that got printed since around probably 10 o'clock when prices came back to retest the support level that the initial up move started from. So when we see that high volume on candle number C, that lets us know that whatever price action that we were seeing is definitely verified and is significant, because the volume backs it up. So we have price action and volume both working on the same accord. So I said, okay, cool. Triple top, lower high, and then we break back down and close below the support level from this prior higher low right here. And then we saw prices come back, retest that level one more time, and then sell off. So I got caught up on the retest, because I was like, well, if prices are coming all the way back, they just broke above the higher low again. What I was looking at were these wicks right here. So I was like, okay, they broke past the higher low, but the wick can still act as support. So if I see momentum come in from the bottom of the wick, I'm gonna just go ahead and get out. So that's the reason that I got out prematurely at trade number 3, which was really crazy, because I think I got in at, I want to say I shorted at 259. Well, I shorted at 258, which meant that my stop was 13 points above at 271. Now I got stopped out and closed the trade manually at around 269, which meant that I think it was 268. So it was around 9 points away from my entry, and prices never would have came back to hit my stop if I would have kept my stop where it was and not mess with the trade at all. So that goes back to what the note said when it says that I have to hold my best trades. Now this right here was because this was a loss that was taken because of my mental perspective at that time. I was trading scared because after trade one, after I had that first trade be a really good trade, it was something in my head that said, just call it a day, Ty. It's the last day of the week. You about to go into a holiday. You made a good trade. You might as well ride that momentum into the extended weekend and use that as fuel and fire and motivation to study even harder. So it was half of me that wanted to still trade, but half of me that didn't, because the other half was like, well, if you're already doing well in the pre-market, it makes sense to trade the market when the market opens, because then more than likely you'll probably continue to do the same thing. But I was putting too much pressure on myself because I was like, okay, if I do trade the 9:30 session at the New York Open, I can't give back the profits that I made on trade number one. And anytime you feel like you can't take a loss, that's usually when you take one, because you're trying to do everything to avoid that, which ends up causing that to happen because you're not focusing on the trades in front of you. You're focused on your account balance and not losing money, and that's not what it's about. You got to focus on taking the right trades at the right time, and if you're in your best setups, you got to just stick with the results and live with whatever you come out with, win or loss. So that's really the biggest lesson I learned right there at trade 3. And that one really hurt me too, because I saw myself stop the trade out early just to see it come all the way back down. And I was like, dang, man. 2 times back to back on trade 2 and trade 3. So I was feeling I was starting to get a little bit irritated after that. And that kind of led to me missing the trade at higher low letter E, because right here, after we sold off all the way back down to a major level of support below. We had a little bit of momentum come in, supported by the volume. We see a higher low get formed right here. Prices move up. These 2 wicks were very important. So let's zoom in and look at that real quick, because these 2 wicks were indicating exactly what the buyers were intending to do at that time period. They just weren't able to follow through all the way. So this sign right here was very telling. Now, the buyers were showing their hand. So that meant that if prices would come back to retest the higher low support level, I would have more than enough evidence to go long. I saw the trade come right back, retest the higher low support where I should be getting in at, and I just looked at it and I stared at it and I watched it go all the way up to the exact point where I would have been able to take profit. But I was just too scared to get into the trade, because after trades 2 and trades 3, I had given back all except for 1 point of the profits that I made from trade number 1. And I was like, man, I really don't want to go into negative territory. And if I go long right here at this higher low, what about this selling that was so strong? What if prices continue back down? I'm going to feel like an idiot because I saw that the downtrend was strong and I still took the higher low. But when I look back on this chart after everything has settled and I kind of got over all of the emotion that I had earlier, I'm looking at this setup and saying that this is a perfect setup that I would usually take. So it really comes down to just having the right mindset and not being afraid to swing the bat. Like, think about a professional baseball player. They strike out like 7 times out of 10. And if you hit the ball 3 times out of 10, you can be a Hall of Famer if you do that consistently. So you can't get mad at the fact that you didn't hit the last pitch and you struck out. So now you're going to come up to the plate and just not swing at all. You just got to let it go. You got to go for it. If you see the setup that you recognize and that you understand the most and everything lines up, you take that trade and you live with the results. So that's the biggest lessons I learned from 2, 3, and then the potential trade at higher low number E. Well, letter E. So then we push up, create another higher low. This one never got retested, so that wasn't an opportunity for me to get in. But I did have another opportunity to get in once prices came back and established the higher low at letter number F. Well, why do I keep saying number F? I don't know. It's going to be a number today, letter number F. But anyway, I went long right here at trade number 4 as prices came back to retest the support level of the higher low. Now, that's a good entry. It's a good trade. I recognized my setup and I took it. But the only thing that went wrong was my exit. On this trade, I was still a little bit kind of scared and thinking about my account balance. So I was like, I'm up. I got some profit. Let me just lock that in and call it a day so I can just walk away in profit, and I was up by like 11 points at the time, and I was slightly happy with that. But looking back on it, it really didn't make sense for me to get out right here. So let's just read the notes real quick because that'll help us out a little bit. So I went long here as prices retested the higher low at F. Now I exited early thinking that the uptrend was losing steam, and I thought that because if you see where I got out and you follow it across, it comes back to this higher low that got us, well, this lower high that got established right here at D. So I was like, okay, if this was the lower high where the sell-off began from a little bit earlier, wouldn't it make sense that the market would come back up to retest that level and then get out? It's like, yeah, in other scenarios where the downtrend was really strong, that would probably be a legit idea. But you also have to take into context the overall market that bought prices up to that level. We came up to this level off of a major reversal from a strong downtrend that got followed by a higher low 1, higher low 2, and then higher low 3. So it really didn't give me any true signals to get out. It was just me inside of my head just overthinking it. And I should have just held this trade because there really were no signs that said, hey, you should get out of this trade. And if I would have held this like I should have, I would have been able to take prices all the way back up to my scalp target of around 20 to 25 points. I would have been able to call it a day and still be able to make the same amount of profit that I had from trade 1 and just end the day where I was. So I ended the day in profit, but not as much profit as I could have had. And I think that's what I really have to work on, because these are not trades that I'm looking at and saying, oh, I could have got in or I could have did this. These were all trades where I participated in the market and I was in there, but I just didn't execute the trade the right way, and I ended up leaving points on the table. So I just got to work on just remembering to trade the chart and don't trade your account balance. Whatever your profit goals are, put those on the back burner. Your profit goals do not matter when you're in the middle of a session. What matters is you taking the right trade, looking for the right setups, and playing your trading plan the exact way that you know that you should. And then you look at the results at the end of the day and say, oh, okay, I like what I got, or I didn't like what I received. So just remember, always remember, don't focus on the money. Focus on the trades, focus on proper execution, proper trade management, proper entries, proper exits, and everything else will take care of itself. So that's the biggest lesson I learned today. A little disappointed, but at the same time, I finished the day in profit. I finished the week in profit. So even though I do have some things that I got to work on, I can't even be mad, man. I'm working myself out of drawdown. I had 2 good weeks in a row, back to back. So I think a third week next week where I come out and I just do everything that I'm supposed to would officially get me out of the drawdown period, and I might be able to start trading a little bit more bigger size and getting back to the size that I'm used to. So over this long extended weekend, my plans are to just hit these charts hard, because I gotta come back next week and just make good trades. That's my only focus. Look for my higher low setup and trade it the exact perfect way. So that's all I got for you guys right now. It's been a good week so far. I hope you guys learned a lot today about making sure that you trade the trades in front of you, the chart in front of you, and not your account balance. And also making sure that if you get into your best trades like I did right here at Trade 3, you got to make sure that you hold on to that bad boy until it can't be held on to anymore, because your best trades usually make you the most money. So you want to make sure that you're participating in those moves when they come along and the opportunity is present. So I'll be back on Monday. I'm not sure what date that is, but next Monday at the end of the week, after this week is over, I'll be back. But until then, you guys, I'll see you soon. Study hard, have a good one, take it easy, and enjoy your holidays.